Hello, hello, hello. We are live. It is Steven with TradesPlan.com and Greg with TradesPlan.com. Greg, I am what's the word I'm looking for? I will host, but Greg is going to give you all the goods today, and I will chime in from time to time. Hope everybody had a really nice New Year's, whether you went out or not. I know COVID numbers are crazy, but I hope you at least enjoyed some R&R. 2022 is starting off kind of like 2021, so we'll see how it goes. But let's just focus on the market.
Yes, Merry Christmas to everyone. I'll like to add to that. I hope you had a great time. It's Happy New Year, and we'll make some money together here in 2022.
Yeah, I think we will. I think we will regardless. And one thing I always like to talk about is like, hey, there's what the news says the market's supposed to do, and then there's what the market actually does. Focus on what the market actually does, because we hit 1 million cases the other day, and the S&P 500 is less than 1% of an all-time high. So the market isn't as concerned just yet, okay? And this changes daily. This changes daily, so you have to take it day by day. Don't stick your flag in the sand and be too bearish or too bullish.
Yeah, absolutely agree with that. The Omicron, variant, it seems to be very infectious, but it seems to be really mild compared to the Delta variant. Doesn't seem to be making a lot of people sick. Of course, we have a lot of vaccinated people in the world today, so yeah, it doesn't seem to be affecting the markets. That's a good sign.
We'll give it a couple more minutes, maybe one more minute before we get started. Greg's going to talk about Evergrande because Greg loves Chinese real estate. He's thinking about buying some.
No.
Waiting for that deep discount to happen.
Not really.
Have you ever been to China?
No, I never have.
The crazy thing, I had a good friend, a trader that we talk all the time. He lives in France. He was in China. I think he was in Wuhan, or like right outside of Wuhan, when the pandemic broke. It is crazy. He had to like get out of there, leave early. Like, it was nuts, man. I was messaging him. He's like, yeah, I'm about to cut my vacation short. Everybody's getting crazy over here. Like,
wow. Yeah. Wuhan is the center of it all. That's where it started.
What a worse place to be on a vacation.
Oh yeah. Let's go to Wuhan right before the pandemic started.
I
know. Great timing, buddy. Okay.
Yeah, worse idea. But okay, everybody, I'm going to hand it over to Greg. We'll keep this 30 minutes. I think that's nice, consumable information. Greg's going to talk about some topics on the market, touch base on the market, and then goes through some trade setups, some stuff that's really moving. I'll chime in from time to time, and at the end we can open it. Final 5 minutes, we can open it up for Q&A. Who anybody who wants it. So I'm going to take, Greg, just to kind of make it full screen. I'm going to take my.
You can take mine. Out of business. Crazy news. Chinese government is telling them to demolish 39 of the buildings that they built worth many millions of dollars. That doesn't make any sense at all. But anyway, the big news on Evergrande is that it hasn't seemed to affect the Chinese economy or stock market, at least not yet. And so that's good news. That just means that's not going to affect us if it's not affecting them. The damage won't spill over into our markets. The whole world is a tight world economy these days. If a major economy has big problems, it's going to affect everybody else. And that's why I'm watching this. But it doesn't seem to be a problem at this point. And so that's all we need to know for right now. So what I do want to talk about right now is that there are some very interesting uh, things going on in the market. It's been a crazy market. This has been one of the craziest times I've ever seen in the market. I think Stephen would agree with me on that. Um, January tends to be a little bit crazy when fund managers are rebalancing their portfolio. But right now, we've got some sectors that are doing really well and some that are doing just horribly. And so we want to talk about which sectors are doing what. Like right now, as the market hits new highs, we've got some stocks that are down 30 to 50%. And you generally want to trade in the direction that the market is going, the long-term trend, which is still up, and yet certain stocks are not doing that. So that's some crazy divergences. Gary Kaltbaum said last night on his radio show that he's now seeing some of the quote most wicked divergences in the market he's ever seen. I've talked about Gary Kaltbaum. That's him right here. Listening to his radio show. Uh, Very interesting. One of those sectors that's doing really well is oil and gas. Okay, this is the oil price over the last few months, the last year actually. So we can see that oil prices are trending up overall with higher highs and higher lows. All right, so let's look at a couple of oil stocks like ExxonMobil. ExxonMobil's way up over the last few days. And if you look at different oil and gas stocks, they're all pretty much doing that. So the reasoning behind that is when you get inflation, the price of assets is going to go up. Um, Whether it's real estate, like the real estate market is very hot across the United States, oil, gasoline, the metals, uh, gold, silver, etc., are tend to go up. So let's look at um, gold. So this is a miner. Freeport McMoran is a great big mining company. This is what they've done over the last 2 weeks. They're at all-time highs here. Okay, so these types of companies are doing really well. Um, Oil and gas. Let's see the
Pull up,
metals.
pull up IEO if you don't mind. I know
IEO.
it's an oil and gas ETF. Just kind of so kind of the way I look at this, and this is a position I took, let's say Wednesday on Monday, as it was breaking back above the 50-day moving average, and you can kind of see it looks like an inverse head and shoulders pattern with a breakout above the neckline, but it looks pretty good. And Greg was talking about energy, and I'm making the case for energy ETFs as well because man, they made a big move. They made a big pullback. And it's possible that if the Omicron variant doesn't scare everybody or doesn't scare the economy, these were being held back over the last couple of months by what's going to happen with the Omicron. And if the sky doesn't fall, at least economically speaking, they could continue to move quite a bit higher.
Now, Stephen, I assume that you got into this position earlier. I would be a little hesitant to enter right here because it's gone up so much in the last few days. Wouldn't you wait for a pullback and then enter at this point?
I would. At this point in time, it looks like the neckline is around $64. So I got in around 63 and now it's 66. So yeah, I think a pullback to retest that neckline would probably be a good idea. Sometimes with commodities, they go parabolic. It might not happen. But yeah, I don't chase these, but there's other ones that might not look as extended, like FCG. Oh yeah, that's kind of looking to pop too, but there's broad participation in energy right now. And I think that's something that you really, really want to pay attention to, as Greg stated.
Absolutely. I've been burned so many times by, trying to chase these moves. What tends to happen when I've done it is that it'll have a pullback, it'll stop me out, and then it'll go back up. And so I would much rather miss a move than take a loss in my account. because there's always another opportunity out there in the market, right? So for this, I would not want to enter right here. I'll wait for the pullback, but the fundamentals behind this are this could go up quite a bit over the coming weeks and months with oil prices and financials. Let's look at some of the financial stocks like Goldman Sachs. Has a similar pattern. What's going on is as they start to raise interest rates, well, that's good for banks because they have more spread on the money that they loan out, which means they have more profits. With higher interest rates, they can charge more for their loans, but they still don't have to pay as much on accounts for money that deposit into their accounts. So they make more money off of that. So Goldman is one company that's profiting from that. Let's look at some others like American Express. Really a similar pattern, up very strong the last few days. Pretty much most of the financials I looked at had the same pattern. Here's JP Morgan.
So, Greg, would you say, is it safe to say, in your opinion, a lot of times when I see the shift from growth stocks to value stocks, a lot of times like oil and banks will actually move together because they're very inflationary, right? Banks are going to rise when interest rates rise, when inflation is, energy rises. So they kind of all ride together. So, yesterday it looked like growth was making a comeback and then it got slammed midday. And yet these value industries continue to rise. So I think the lesson learned is, like, Greg, you're pointing out the good stuff, the banks and the energy probably should be a main area of focus for most people. If just the NASDAQ and other tech stocks, they just continue to, every time they go up a few points, just kind of get hit really hard because usually in inflationary environments, tech underperforms.
Absolutely right. Let's look at some of those stocks that take a hit. Some of those growth stocks. Let's see if I can find which ones. Now, PayPal is a financial company, but the chart doesn't look anything like Goldman Sachs chart, and it did not move up strong the last few days. It's still below the 50-day moving average there. So that's one. Let's look at something else. Let's look at, how about Roku? Roku has been a fast-growing stock, has a lot of long-term potential, but it's taken quite a hit in the last week and in recent months. So not one I want to touch right now. Let's see what else is taking a hit. Let's look at some tech stocks. Microsoft. It's got a pullback, but it's still not too far off the highs. NVIDIA is it's in the semiconductor area, and it's got some hardware. Anyway, it's not as strong. It's a tech stock's not as strong as it was. Still not too far from the highs, so holding up pretty well. One of the better ones. Let's look at a couple trades that I want to look at this trade that I'm doing right now. Now, I sent out an alert on this. This is Rivian. This is the electrical vehicle maker. And in the alert, I wrote that Rivian had zero sales last year, zero. I think they're supposed to have a little bit this year, but it has been a market cap just as high almost as Ford or GM that has over 200 billion in sales every year. And so this is a stock that's all based on hope for the future for electric vehicles. And since the first week after the IPO, they've been selling it off. Now, after earnings, they sold it off a few weeks ago, and you see the gap there. The thing is, it hasn't bounced back up very far. It didn't even fill the gap all the way. I guess it maybe did on that one day, on the 27th. But I think this stock has potential to go down much further. And so that's why I issued a put alert on this. And it's already in the money to buy a put at the 100 price level, which was basically at the money yesterday. when I issued it. So I think this has a lot of potential to go down. However, the put going out just 2 months was about $1,300. So you got to have a pretty big account to touch this. Okay, I recommended at least 25,000 in your account. So I seem to have an odd ability to find stocks that are going down, even though the market is at highs. Okay, so there's one, and here's the other trade we're still in: Snapchat. Issued this a few days ago, end of last week, and we bought a 47 put and we sold the 42 put. So this is quickly approaching our max profit area at 42. It's down a little today. It was down very big yesterday. If we see any kind of up move, I think I want to pull the trigger and ring the cash register and make the profits on this. I don't want to see this bounce back. It's been a choppy market. I want to lock in my profits.
Which one is this?
This is Snapchat.
Ah.
What do you think?
I think it looks like. I think where did you short at? Where did you buy?
About end of last week. So around the first red candle after 48.74, right about there.
Yeah. I mean, if it's getting pretty close to the max, anyways, yeah.
Pretty close.
It's getting pretty close. I'd get close to ringing the register because it's also could be potentially have support around that 43 area. But I mean, we'll see. I mean, the chart looks ugly as sin. So
it does, doesn't it?
I agree with the trade 100%.
Okay. So the question is really, is it going to bounce off of a support level where it did about 2 weeks ago at 42.96? Yesterday, you see the tail below the candle. That means they bought it back up intraday, but they're still pushing it down today. So we probably have a little bit more room to go to the downside before we ring the cash register. We'll see. Play it by ear. But again, max profit on this is at 42. So if it even comes close to 42, I want to ring the cash register and make my money. We've got some requests for stocks in the comment section. ON, why don't we take a look at that? Looking pretty strong. Yeah, they're in the semiconductor area. Semiconductors have all been pretty strong. So this is looking good. Looking good as far as how to play it. From here, I think I'd want to see a further breakout above yesterday's high before I'd want to enter it. Looks like it's gone sideways for the last week. So we'll see. What else we got? Citi. Let's look at Citi. Citigroup, another financial stock acting much like the others, JP Morgan and Goldman Sachs. Again, wouldn't want to chase it here, would wait for a pullback. And then it's like a J pattern. You see it fall back maybe down to 61, 62, and then start to go sideways, start to go back up. When you see the part of the J starting to go back up, that's where you want to buy it. You're hoping the new uptrend is going to resume right there. So that would be the play on this. I just hate chasing these. I've done them so many times and lost money trying to chase them. Almost always there's some sort of pullback where you can enter. Not always, but usually. So I'd rather wait and make sure I don't lose money, honestly. PWI, let's look at this chart. Wow. Titan. Big move over the last few weeks. As far as the way, I don't know much about this particular stock, but same situation. It's already made a move. I want to see a bigger pullback before I would dare enter it. Because I mean, think about it. If you bought in right here, it might pull back to about mid-level, about $9 a share, and then zoom up. But this is a low price. Is this no low price stock? About $10, $11 a share. Yeah, these low price stocks, I tend to stay away from them because they're so volatile. The market's already plenty volatile. Um, so still, I want to wait for a pullback on this. Frank has got some stocks to look at as well. Got some symbols listed there. AbbVie, healthcare, looking strong, steady climber here. Um, it's had such a big. Okay, let's look at this chart for just a minute. You've got the big up move at the gap back in late October. You see that? You probably can't see my cursor on the screen, but you can see on, I think it's October 31st, the last day of October, you got the gap up on heavy volume. The volume bar goes into the candle there. That would have been the right entry point for this. Or if you missed that and it goes sideways for the next few weeks, when you see it break out to new highs around December 6th or December 5th or 4th, right in there, that's where you'd want to buy it again because you see it's going on to new highs. Those are the two best entry points on this. Okay, for this, hold on a second. Let's go over here. Okay, so now here we are. It's now a good 15, 20 bucks a share higher. Now what? Is it going to go up from here? You want to catch these trends early. You want to try to catch them as they happen, this is after it's happened. So I don't know if it's going to keep going up from here. It's already had a big move. I would expect a pretty sizable pullback at some point. And then again, look for the J pattern. If you miss the move, don't chase it because there's going to be a pullback most likely at some point. So I wouldn't buy it right here. I would wait personally. That's just me. You know, it's a riskier play to buy it right here. Let's look at CFG for a minute. I'm just saying that because I've done that so many times where you know, like right now with CFG, Citizens Financial, it looks great, but it's right now losing momentum. We've had two very strong days and it's up today, but it's not nearly as strong as it did for the last couple of days. That means it probably will go a little higher, but a pullback is coming. And I don't want to get caught in that. So I want to wait for a pullback to get better prices. Maybe about half the distance of the up move is the general retracement, and then enter there. I just don't want to enter it right here. AMP, let's look at AMP real quick. I would imagine a lot of these stocks are going to have a similar story. They broke out and it's too late to enter. Same thing with AMP for me, Ameriprise Financial. Now, having said that, I think the fundamentals that are fueling these moves across the board in financial and oil and gas are probably going to continue for quite a while, for months or maybe even years to come. So there will be good long-term up moves from here, I think. But still, I don't want to buy it right here. I'm going to wait for the pullback. Having said that, there's going to be a lot of good pullbacks to look at on these stocks. It's probably going to be the same thing with Apache, APA, and I'll look at IBM in a minute too. So let's look at that. Yeah, pretty much the same thing. Okay, so here's a good example of the pullback. About a week ago, we had a 1, 2, 3, 4-day pullback. The high was at 28.62. The low was at 26.53, just a couple, let's see, couple dollar pullback. And then when you say at the open the next day, it starts to go to higher highs and go again above the 50-day moving average, that's your entry point as early as possible that day. It's showing you that the uptrend is probably continuing, and that's exactly what happened. So that would be an entry point. That's a really good example of the J that I'm talking about. The very front of the J is the 28.62 price. It goes down. When it starts to curl back up on the right side, that's where you buy, right on the first up candle following the 4 down days. That's your entry point, as early in the day as it goes above the previous day's candle. And if you go down below and look at volume, you can see increased volume on those days when the stock started to go back up. That's a very good sign of heavy demand, and that the stock's likely going to keep going up from there. Okay, CLF. The funny thing is, I don't know every single one of these stocks. I'm not familiar with all of them, but the technical analysis, you read them, and they work for all stocks. And so you can see what's going on just based on the financial footprint of stock prices. Okay, so again, this is the materials, or let's see, what is this? Steel company. Another materials company, very strong in recent days. Very strong today. Again, it's gone too high to buy it right here. Wouldn't want to buy it. It's going to have a pullback at some point. So wait for the pullback. Pretty much all metals and mining and materials companies and oil and gas, they're all going to have charts that look kind of like this. Okay. Frank, what is your main focus in the market regarding option strategies? Okay, let's talk about that for just a moment. I started doing credit spreads for income. I really got away from that a bit because the market got so choppy and so much more volatile. When that happens, there's too much risk for doing credit spreads. You can make more money with debit spreads. And so I immediately switched. Now, I explained that in the video that I made for the options workshop, but not all of you got that. And so it's good that I'm explaining that here. Okay. If the market settles down a little bit, I'd be happy, or if I see individual trades that look right, I'd be happy to do credit spreads. But if there's money to be made with debit spreads, I'm willing to go for that. Okay. So that's kind of my ideas behind why we've jumped to debit spreads.
And to kind of add to that, I mean, you did just a straight put on Rivian, right? So with the volatility, sometimes if you're going to risk $200, let's say on a spread, but it's a volatile trade, and you could get stopped out easy, you might as well risk $200 and put that on a straight put option, right? So your stop isn't as tight. It gives you more wiggle room, and you're risking the absolute same, right? So all you have to win is the direction of the trade if you do a straight put on a volatile trade versus when you do some of the spreads, you can be right, but the volatility can still stop you out.
Absolutely. Absolutely. So look at this for just a second. This is Rivian. Rivian made a high a couple of months ago at 179. It's now about half of that, a little bit, about 45% lower. So it's gone down over $80 a share. Significant drop. The fact that it's only bounced a little bit after such a big drop leads me to believe there's more room to go to the downside. That's why I'm doing this. When you do a debit spread, you're buying a put pretty much at the money or near the money. We did it at 100 yesterday. It was slightly out of the money. The stock was at 101.50, I believe, when I entered that trade and issued the alert. Well, now it's at 96. It looks like it could go down quite a bit. When you do a debit spread, you're making the spread cost cheaper by selling another put down low where you give up profits if it goes below that. It might be, in a trade like this, it might be 90 or 85 or 88. But the thing is, if this thing really drops, let's say it goes to 60 in the next 2 months, you gave up a lot of profits by making your spread just a little cheaper. It's better to take a little more risk to potentially make a grand slam. or a real big winner if this thing really drops like it did before. That's why I'm doing it that way. Okay. So this has a lot of potential, but it's also high risk. If this goes up above the recent highs of around 106 at the most, we will get out. Okay. But it looks good on the downside.
Greg,
Yeah.
can you bring up one chart that I just wanted to address, and that's uranium, URNM?
Sure.
And I think this should just maybe be something on somebody's watch list. So, I mean, kind of look at this right here. You have a volatile trade that has came down and has found double bottom. Is this URNM?
Yes.
Okay, that has came down and has found really double bottom support. And Greg doesn't have a 200-day moving average, but where that bottom support is right at the 200-day. And now it's circling around to come higher, and it is clear that there are two $79 bars resistance lines. It's cleared that, and it's clearing the moving average. So, you know, again, this is going up 5% or down 5% on a daily basis, but I do have a trade in this, and it's working pretty well. And, you know, to add to this, there was a something that came out with the EU where they're trying to set different green energy guidelines, and the EU actually voted, or a lot of the bloc did, that uranium and nuclear energy can be considered green energy, which gives them tax credits and just a whole other lot of things as far as expanding versus trying to contract like they do are on coal plants. So the fundamental reason is there for this to potentially be successful and have act number 2, and that's take another nice leg up. So again, this is not something you buy and hold. This is not something you don't use stop losses with. It's a very, very aggressive trade. But, you know, I like it. I'm probably going to book partial profits on it today. Raise my stop to break even and see if I can get the rest to run. Kevin said he already pulled profits on URNM. Yep.
Yeah, so on this, it could, based on the chart, it easily could go up to previous resistance of around 93 to 97 up there somewhere.
Oh, 100%. Easy. I don't think it's going to be a straight shot up. It can zig and it can zag. But yeah, I mean, if you're patient, I mean, it's got the technicals and it's got the fundamentals to back it. So
that's always a good thing to have both of those in your direction. But it is a choppy stock. It'd be, you got to have fortitude to do a trade like this.
I mean, well, you got to have rules. And, you know, like I bought down closer to the 200-day moving average. Just so I said, hey, if it breaks it, I'm out. It never broke it. It just kind of chopped around, and then it's breaking above the bottom of the consolidation.
Do you remember what day was your entry point?
Yeah, my entry point was on, give me a second, 12:15.
12:15. Oh, you got in quite a bit. Oh, I see. You bound. Is that the day, the up candle there? I think so.
Yeah, it's a big up candle. It's that big bar that bounced off it. Now it immediately came down and retested those lows, and I just decided to hang in there because the stop loss is just right below it. And that's also a great, you know, kind of trade rule example. Like, don't sell early. Like if you have a stop loss at 8% and it's down 6%, and you say, oh, I want to get out now because I think it's going to stop out, like, stick to the plan you made before you made the trade. Because, yes, some of them will hit that stop out. Some of them will find support and turn right back around and make a good trade.
Okay, excellent.
I think that's it. Kevin, if there's anything else you want to touch, I said Kevin. I was looking at Kevin's name. Greg. Unless there's any other tickers, I think we can call it, unless there's anything else you need to touch base on real quick.
No, there's nothing else I need to touch on. If you have any questions, you can email me, options@thetradersplan.com. I'll be happy to answer them for you.
Okay. All right. We'll see you guys on the inside.
Okay. Have a great week, you guys.
Have a great week. Hey, I want to answer. Hey, Greg.
Yeah.
There's one question before I shut down that
Sure.
someone keeps asking. Do you trade options if evaluation price is greater than the theoretical price?
I don't know what that means.
I don't either. Maybe you can reword that.
Yeah, if you want to email me on that, we can talk about it. But I actually don't understand your question.
I don't either. Maybe she's trying to see if we take valuations into account. Email Greg at options@thetradersplane.com. He'll take care of that for you. All right.
All right, thanks,
Peace.
guys.
See ya.
See ya.
Go Eagles.